Hello, and welcome to another MCO update on Link. We are dealing with a corrective pullback at the moment on the Link chart. At least it looks corrective. It looks like a three-wave move to the downside from the 25th of April high, from that swing high after three waves formed price tops. Could very well be that this was an A wave top as per previous updates. That's the A wave in a third wave. Let me move the upper fib area here to the side, and then we can just stretch everything a little bit here, spread it out a bit. So quick reminder that on the Link chart, we can really only say with confidence that Link formed a low, substantial low I'm talking about, on the 7th of April, once we have a 5-wave move up completed. Now we only have 3 waves, but that what would be the third wave is a little short. So we haven't even reached the so-called 100% Fibonacci extension. So it seems likely that in this move to the upside, the market would stretch higher to complete wave C of 3, maybe in the area around $17.31 to $18.46. I'm just showing you what we need to see for a 5-wave move. Technically speaking, one more high would fulfill minimum requirements, okay? Technically speaking, because we would have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. But I can tell you that I don't trust diagonal patterns if the third wave didn't reach the 138% extension. On top of that, as you can see, this rally here, labeled wave A, even if it was the third wave of a diagonal, it would be shorter than the first wave. So the 5th wave would have to be even shorter, because the third wave must never be the shortest wave out of waves 1, 3, and 5. It's a rule. So yeah, again, it's just sort of things to watch out for. What I can tell you is that either way, the price should hold above $12.58 in this current pullback to keep the uptrend alive. And then after one more high, we might already call that 5 waves, minimum requirements fulfilled, but ideally we would get it followed through as shown here. So basically completing that rally, which would be, in my interpretation, wave C of 3, then a higher low in wave 4, and a higher high in wave 5. That would be ideal. Now the current focus is on whether the bulls can turn up before the price breaks below $12.58. Before the price breaks below the 78.6 retracement. For now, this corrective pullback, can be seen as a B wave. That's my view. And we know that in a B wave pullback within a third wave, the 78.6 fib level should hold. So these are the parameters. That means there's a lot to prove still. And on the nano level, the move down, that's good news, is looking like a corrective pullback, which means it's overlapping. We have a 3-wave move down. That's okay. That is promising, because if this was an impulse and if we'd see, rapid movements to the downside, it would be a little less promising. It would be more bearish, and there would be a higher likelihood that we break support. Now that can still happen. There's definitely no upside reversal yet. But now that we've reached this support area, I'm watching for a potential start of wave C. What would be a first signal that this C wave up has started? Well, a first rally and a higher low. Okay, like a 1-2 setup in wave C. Better, a break above this swing high from the 1st of May that formed around $15.10. So those are the things to watch out for as we're heading into a new trading week. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.